So you're interested in cryptocurrency, you want to make money online, and you're great at computers. Lucky for you, you have what it takes to make it big in crypto mining. Despite popular belief, you don't need your own wind turbines or nuclear power plant to mine crypto and make money from the comfort of your home. But how does it work? Hi, how are you? We hope you are having a great day. This is the one and only Tech Factuala, reminding you to stay techie. In this channel, we bring you the most fantastic and most informative news about this world of technology and other electronic advancements and innovations that you should be updated on. We tell you about the world's jaw-dropping smartphones, appliances, gadgets, and other related subjects. For this video, we will share 6 ways to make money online by mining crypto and Bitcoin. Before that, make sure to subscribe to our channel and turn on the notification bell so you'll get updated on our future uploads. It will also be nice to give this video a like and share it with your friends. A lot of us wish that we had our own magic lamp and a genie friend that could make us rich in an instant. Well, we kind of have that nowadays, except we call it crypto. Cryptocurrencies such as Bitcoin are specifically engineered with autonomous, decentralized system in order to pay compensation to miners for processing transactions. The result? An unprecedented growth in the mining industry. So it isn't surprising to know that crypto mining is first on our list. But first, what is mining? A lot of people believe that cryptocurrency mining is merely a method of creating new money. Actually, it's a process that entails authenticating cryptocurrency transactions on a blockchain network and adding them to a distributed ledger. Much more complicated than it sounds, isn't it? The most essential aspect of crypto mining is that it prevents digital currency from being spent twice on a decentralized network. That is, when a person spends Bitcoin, the digital ledger must be updated by debiting one account and crediting the other. This is similar to how actual currencies are updated. However, the fact that digital platforms may be readily manipulated proves to be one of the challenges for miners. Bitcoin's distributed ledger only permits transactions to be updated on the digital ledger when they are validated by miners. Of course, this puts an extra weight on the miners' shoulders to prevent double spending in the network. Meanwhile, new currencies are being created to compensate miners for their efforts in maintaining the network security. Due to a lack of centralized authority and distributed ledgers, the mining process is essential for confirming transactions. This way, the miners increase their chances of earning freshly issued coins. With all that's been said, you may just ask, how do you start mining crypto? Mining cryptocurrency demands the use of computers equipped with specialized software created purely for the purpose of solving complex cryptographic math problems. In the early days of the technology, cryptocurrencies such as Bitcoin could be mined using a simple CPU chip installed on a home computer. In recent years, however, the growing difficulty levels of most cryptocurrencies have rendered CPU processors unusable for cryptocurrency mining purposes. Today, you'll need a specialized graphics processing unit, or GPU, or an application-specific integrated circuit. The GPUs in the mining setup must also be linked to a stable internet connection at all times in order to function properly. Each crypto miner is also necessary to be a member of an online crypto mining pool in order to participate in the mining process. Number 2. Staking and lending. Staking is a method of ensuring that cryptocurrency transactions are genuine. As a staker, you hold coins but do not use them. Instead, you place the funds in a Bitcoin wallet and keep them safe. The transactions are then validated using a proof-of-stake network, which leverages your money to do so. Of course, you will be rewarded for your contributions. To put it another way, you're lending coins to the system. This enables the network to retain its security while also verifying transactional information. The incentive you receive is analogous to the interest a bank would give you on a credit balance in a bank account. The proof-of-stake algorithm selects transaction validators depending on the quality of coins that you have pledged to stake in a particular transaction. As a result, it is far more energy efficient than crypto mining and does not necessitate the purchase of expensive gear. You may also opt to lend coins to other investors in order to earn interest on money you give them. Number 3. Trading. Because it is utilized with stocks and the exchange of fiat currencies, this is a common means of generating money, and you may have heard of it as well. When it comes to cryptocurrency, the procedure is the same. You purchase money and then seek to sell it for a profit. This, however, is not a fail-safe method. For people who aren't familiar with the stock market, even standard stocks might be a dangerous investment for those who don't understand what they're getting themselves into. But on the flip side, volatility creates potential profit. It is considerably riskier to trade cryptocurrency since it is hard to forecast how a coin will perform from one day to the next. Aside from that, if you want to make a decent living from cryptocurrency, you'll need to approach it like a full-time job, since you'll need to continually monitor how well or poorly a coin is performing in order to obtain the greatest purchasing and selling prices. Having said that, some people do make a life from trading commodities. As an effective trader, you must possess strong analytical and technical abilities. If you want to accurately forecast price rises and declines, you'll need to look at market charts that show how each listed item has performed. Before continuing with our list, what do you think of the ways we've shared so far? Think they'll help you become the next crypto billionaire? Let us know in the comments below. We'd love to hear your thoughts. Next up, we have number 4, airdrops. Airdrops are the riskiest of all the methods for obtaining free Bitcoin. For most investors, it's more than they expected to be worth for their time. When new coins are introduced, developers often use airdrops to gain support. It's basically a free currency for people to check out. As good as it may sound, it is critical to exercise caution while embarking on a new cryptocurrency venture. Fake airdrop and initial coin offering are typical schemes penetrated by hackers. Unfortunately, many of the coins that have been minted in the shape of air bubbles are not particularly useful as investment products. Experts advise beginning cryptocurrency users to stay with the more well-known cryptocurrencies like Bitcoin and Ethereum. Airdropped cryptocurrencies are still subject to taxation, regardless of how they were acquired. According to the Internet Revenue Service, you must declare based on the fair market value of the distributed ledger on the date of registration, in most cases when receiving airdrops from digital wallets. Number 5. Dividends. Obtaining dividends from your crypto assets is another way to generate income from your investments. If you're familiar with the concept of investing in stocks or bonds, you're definitely aware of what dividends are and how they work. Dividends, to put it another way, are small cash payments distributed to shareholders on a regular basis, as explained above. It is common for businesses to produce profits for a quarter, or sometimes a year, and then split those profits and distribute them among shareholders. However, it is possible to generate money with cryptocurrency even if you don't have a huge amount of it in your account. If you don't want to have much cryptocurrency, it may be a good method to supplement your income. You will, however, need to conduct some preliminary study to determine which cryptocurrencies offer dividends and whether the payments are worthwhile. Some cryptocurrencies, such as VeChain, Neo, Redcoin, Navcoin, Dacred, and their yearly distributions in general, pay dividends in multiple coins. Cryptocurrency dividends are distinct from stock dividends in that they pay more tokens rather than cash in exchange for the dividends. And lastly, number 6, buy and hold. People that are willing to take chances are more likely to benefit from this strategy. It entails acquiring crypto assets of your choice from a cryptocurrency exchange and then purchasing more when the price of those assets drops, a practice known as buying the dip. After several months or years, the asset may be sold for a substantial profit relative to the acquisition price, resulting in a significant total profit. Despite the fact that well-established cryptocurrencies such as Bitcoin, Ethereum, and Litecoin fluctuate on a daily basis, a closer look at the chart reveals that these coins have maintained an upward trend for the entirety of 2018. Because of the buzz around new cryptocurrencies, such as Chia, new coins are more likely to debut at a greater price. Later on, the value of the asset decreases, and it takes a long time to recover. When there are not enough purchasers in the market or when the usefulness of the service performed is insufficient, they are at risk of disappearing. Before making a decision on which cryptocurrency to employ as a long-term investment, it is critical to study the white paper for that particular coin. It will offer you with reasonable understanding of its origins and purchase, as well as sufficient information to allow it to withstand the test of time. The list of potential methods to make money with cryptocurrency is virtually limitless. If we're being picky, you might even seek to be compensated for your work with crypto, although your bosses may not agree. Just remember that the more knowledge you get about a certain industry, the more probable it is that you will come across an opportunity that matches your requirements. Just keep in mind that it is a relatively new market, and that there are no assurances that you will make a lot of money from it. Do your homework and be responsible. If you have any ideas or suggestions, don't hesitate to comment below. We will always love to hear your thoughts and opinions. Also, don't forget to subscribe to this channel and turn on the notification bell so you'll get updated about future uploads about the wonders of the cryptocurrency world. Again, this is the one and only Tech Factuala, and we will see you soon in our next video. Thanks for watching!